And we are recording. Hello, old friend. What's up, David?
How are you, Ron?
This is our inaugural kind of podcast, yeah?
Yeah, I'm really looking forward to sharing some perspectives, both yours and mine,
Mhm.
with a broader audience. And, think we'll make this pretty engaging, and who knows what will be said along the way.
And none of this is investment advice at all. Consider this our full disclaimer. None of this is investment and legal advice.
Yes, totally agree.
How often do I say that to you, by the way? Too many times in a week.
You say that every time. I think we just need a recording, and we're just like, before I have a conversation with anybody, we just make that recording and then we just dive in. So
Exactly.
yeah, you're very on top of these things, which I'm sure everybody appreciates.
I try, my friend. I try. So what have you thought about the markets? It's Monday. We're recording, and my entire weekend, besides doing work, has been friends and colleagues calling up and saying either, you see, I told you it's all crap, which I think you and I have heard from people for the past 5-6 years plus, to, is this a good time for me to buy? And we're talking about the precipitous BTC price drops, the Dogecoin price drops, really kind of across the spectrum. What do you think? What did you see with these drops?
Well, for starters, I think that some consolidation and this like upward bull market we're in now is a good thing.
Yep.
I think consolidation in general is a good thing, and that anything that's just going up parabolically is going to need a chance to rest. And I really think a lot of it depends on what your thesis is. Like my thesis is that I'm bullish, so that when there are these pullbacks, if I liked BTC at 55,000, it's like a 20% sale that you get from a clothing company at the end of the month because they have extra inventory. It's almost akin to that. And like some of it is technical, Ron. Like there's some technical analysis and technical levels that we hit, and we bounce off of that. Sometimes it's support, sometimes it's resistance. But one of the beauties of crypto is that it is volatile, and I really don't get too worked up about swings in the market. Yeah. And I think in particular, Ron, like as you've seen before, the weekends tend to be very volatile. And you see a lot of liquidations, whether it be on Binance or some of the other exchanges. So, this market is still pretty highly levered. And so when you see moves, you start to see a sort of rolling effect as the liquidations take place, as people are over levered.
And I think some of the statistics, I forgot what website, but they were looking at liquidations from levered positions, and they were, I don't want to call it an all-time high, although that might be the case, but they were billions of dollars delevering. And let's talk about that a little bit, because I think that's another kind of nebulous thing for a lot of people. What are we talking about with these deleveragings, right? Are we, we're talking about staked tokens, for example. We're talking about other instruments where they're wrapped up. What's your perspective on what that deleveraging is coming from and why that's critical?
Well, I think, for instance, here there's just a multiple of leverage that people can have. Sometimes it's 3x, sometimes it's 5x. Overseas, you can have up to 100x.
Right.
And so these moves become really magnified. So as Bruce Arians said, no risk it, no biscuit. People overseas have shown a real willingness to risk it. And so with that risk, there's plenty of reward and upside, and then there's, the losses side of it. So I think ideally people are like very aware of the fact that a move in the market can blow their positions out. Or stop them out, as you should say. But so I think a lot of it has to do with that. And so as we see more people using leverage, every time there's a move, it becomes more magnified because people get stopped out of positions.
Yeah. Do you think there's some portion of this that's what I'll call institutional, professional investor focused? And let me rephrase that. There aren't a lot of retail mom and pop investors that are leveraged in crypto, right? But these are, but those involved, like you and I are pretty deeply engaged in the market, so we get it from the leverage perspective. Who was having the deleverage? Was it the institutional side, do you think, or was it kind of more retail with the risk profile?
Well, so I don't know the percentages, but what I would say is that a sharp institutional house that's doing leverage should have positions in place and the ability to move so that they're not taken out of positions with a small percentage move in the market.
Right.
But without having that data point, I think it's both. I think there are people who are bullish on crypto who will put their crypto in, a depositing, entity where you can borrow money from it and then buy more crypto with that borrowed money. And so they have created their own leverage. And then if there's a move against their position, a more bullish position on a lot of those lending platforms, then they can get stopped out, and then there's forced liquidations of some of their positions.
Right.
So I think on the bullish side of it, the retail who is depositing crypto and then trying to buy more are more susceptible to downturns.
Yeah.
And then what's happening on some of the other exchanges, over in Asia and Europe, is I think that you have access to leverage. So there are Binance users who are in the areas that they can use Binance, who can use leverage on 5, 10. I don't know how high it goes, but it could maybe go up to 100x. So they're exposed both on the short and the long side.
Got it. Right. It's interesting. You and I come out of what I'll call traditional classic financial markets in many regards. When I have this conversation with colleagues talking about institutional engagement in the crypto space, oftentimes I'll hear, well, we don't have the analytic background or understanding. There's just not enough data or information points. I would argue at this point, and David, I'd be interested in your opinion, that's really not the case. The data points associated with institutional engagement, that kind of framework and research required, are different. And what do I mean by that? So for example, you and I can look up outflows and inflows from various crypto exchanges. We could look at large wallet transactions globally. And shout out to Anthony Pompliano and Pompletter. He does a really good job laying out those statistics and those metrics that really inform institutional investment decisions. What are your thoughts on the quality of that data, the importance of that data, and what it means from an investment perspective?
Sure. So I just think it's different data sets that people are using instead of the traditional finance data set. So you use some good ones. There are whale alerts where you can see when tokens are being moved from wallets. There's that, like the greed factor, in what mode are we? Are we in greed? Are we in fear? And so that's an index. There's a sentiment index about, the sentiment of a specific token and how, people are viewing it. If there's a lot of sentiment, is that positive? Is there negative? Or for instance, are there a lot of Google searches on a specific token?
Right.
And then from that perspective, is that bullish or bearish? Right. I would also say that there's a lot of technical analysis that you can look at charts on some of the tokens, and now you have a fair amount of time to look at them. And there are a lot of patterns that you see with tokens now that you see in stocks. So a couple of them are like a cup and handle pattern, or there are other ones where there are retracements on Fibonacci levels. So there are things that you can see and tools that both fundamental and technical analysis use to look at tokens and make an investment decision.
And I think also, and I agree with you, and we both have colleagues now talking to me about head and shoulder tops on their tech charts associated with specific tokens, for example. I think the other thing that is still important though, right? I'm not going to make this dichotomy between fundamental analysis in crypto versus technical analysis. I think it's really a combination of both. And the fundamental part of that coming out of the classic equity space is look at the use case and team and offering that token represents, which evolves over time, right? And the easiest one, BTC as a payments mechanism, which we're not seeing as much of versus speculative. But how do you analyze these things? And I want to bring that back to the other big name that everyone's been talking about this weekend is Dogecoin, and the fall there. But do you agree with that? Like there's there's the technical, but there's also the fundamental around what is this meant to do and why might it be a good investment?
So totally agree with both. And I do believe a blend is the right approach. Personally, I really look at use cases and see where do I think blockchain and specific tokens, where the use case I think is strongest. And I've said this to you before, like I feel like cross-border finance, logistics, I think those are tremendous use cases. And obviously the decentralized finance market is a great use case. So I really think there's a bit of the fundamental, what are people using? What do people need? Like, I think there's a great use case for the blockchain at some point being used for digital identity. So I really feel like there is a lot of opportunities. And, I think you can layer on top of that the technical analysis where you look at a chart and say, this is a pattern that I see. And these are patterns that traditional finance leverages. And I'm going to look at tokens that I like in a specific vertical and then apply some technical analysis to that and come up with tokens I think have a high risk reward.
I'm going to put us on mute for a minute because the gardener's right outside and we'll edit this part out.
Sure.
Perfect timing. They might have gone away. I'm not sure. We'll definitely edit this out in post, but this is what I get for not getting a lawnmower and doing it myself, as my wife asked me to do.
Well, that palatial estate you're on, Ron, it takes a long time for the landscapers to get their work done.
I don't know if it's palatial, but and if they come back around, I'll mute again, David. I'm so sorry. I want to dive into that a little bit as well from the perspective. I'm going to go on mute again. They're coming back. I'm sorry.
Sure. No worries.
All right, we are back, David. Sorry for the interruption. The gardener, the leaf blowing, the phone calls.
No
So we
worries.
talked a little bit about the kind of overlay of technical and fundamental. I want to pivot to something that I've really been interested in and push back on this if you agree, if you disagree. So the whole perspective on Dogecoin. And we can talk about parabolic growth, from 0.003 cents or whatever it was about a year ago. I think in the past 3 months it's up several thousand%, and I could be messing that up. And one of the things we hear often is, well, it's a joke. It's a joke coin. It should have no value. And I understand the genesis story of it. What I think a lot of people are omitting is the evolution of a token like Doge. And what I mean by that is when you look at the payment processors, you and I know many of them in the crypto space. When you look at the bigger pictures around PayPal and the others, there's a growing interest in Doge in this specific example as a payment methodology for a variety of technology reasons. Is that a fair assessment, or is it joke coin in the beginning and joke coin always? What are your thoughts about that kind of market dynamic on Doge?
Look, the first thing I would say is, you can go to the GitHubs of the world and see if people are developing on it or not and using it and what they're using it for.
Right.
And also see how many wallets have some of it and things of that nature. So there are some real metrics you can see to look at and determine whether, there's some actual use or sort of phantom use.
Yeah.
My view is, as long as you know what you're dealing with, and if people want to speculate, far be it from me to tell somebody not to speculate. Right. I don't have a paternalistic view of how people should invest their money or, take risks.
Yeah.
They're adults and they should, you assume the risk and you make the call that you want to make. Look, I read today, somebody sunk all of their investing savings into Dogecoin and took, I think, $180,000 and made it into $1 million.
Right.
That goes against your traditional logic of investing, and that you're so concentrated in one name, and that your whole portfolio will rise or fall with that name.
Yeah.
This person truly embedded sort of the no risk it, no biscuit, and it worked for them.
Yeah. So, and let's be fair though, right? In that instance, my personal perspective, that's the equivalent of going to Vegas and hitting on the roulette table big, for example. That's not even speculation in my mind. But tell me if you disagree.
I mean, well, look, it's just at the furthest most point of speculation. It's all the way to the right on the speculation meter. it's not something anybody would typically recommend, but for this person at this moment, it worked.
Right.
So, but going back to your question, Ron, I don't know that I'm a believer in Doge, the token, for its use case. But I am a believer that if you look at the chart and you look at the momentum, that there's probably money to be made on both sides of that, either shorting it or longing it, depending on when you do it and why you do it. So I think it's a name and play, like GameStop was a name and play. And people will take positions and, we'll see how it all shakes out.
Can you short Doge or some of the other smaller?
I think there are some ways not really available here in the US that you can short some of these. And whether it's in like a basket of like smaller altcoins or in the specific tokens, I do think there's a way to do it. I, as a US resident, are restricted in what I can do or what we have access to. But I do believe that there is a way to do that.
Interesting. So let's dive into that a little bit more. And I think, the statistic we always talk about, or at least colleagues in the industry talk about, there are thousands of cryptos now in the global ecosystem, many of them not available to US citizens. But I think a lot of people, including professional investment level folks, are looking, and I had a colleague call me about this the other day and say, what's the next one that's like, 0.00, go out 4 zeros, 1, and I want to buy $1,000 worth of them. And in your example, I don't want to wake up in a month and they're going to be worth $10 million. I don't advise that, but are you, without making any specific recommendations, are there any of those tokens and the use cases associated with some of those tokens that you find intriguing?
Yeah, look, I mean, it's not much different than like penny stocks in the viewpoint that there are some small cap penny stocks that could have really interesting technology. They don't have funding right now, or they have a limited budget, but given institutional interest and given an opportunity, they can grow. And like I will say this, if you look at some of the mining stocks, the Bitcoin mining stocks, they started under $1 and they've appreciated tremendously.
Right.
So there is a corollary that already exists for this. And like, I've seen people really succeed making profits in specific coins and then rolling some of the profit into really the high end of the speculative range. And it's worked out for them. Right. And so like another analogy is if you play poker, if you're having a good run at the poker table, you may end up being in hands that you wouldn't normally be in. But that's because you're up and you have more to play with and you have a higher risk tolerance because you're playing with either house money or your friend's money, depending on who you're playing poker with.
Right. And to me, it's always keep track of your risk tolerance.
Yeah.
And the other side of that is what you and I know coming out of global markets for many, many years, which is don't get greedy. Like I've seen so many colleagues, I'll use Doge just as the example, rode Doge to 40 something cents and are kicking themselves because it's in, I don't even know where it is, 20 something cents. To me, that's very human emotion. And in the token space, as in regular quote unquote securities, take the emotional component out of it before you make those decisions is something I advise colleagues.
Yeah, well, look, a lot of markets are driven by sentiment too. They have like the greed, fear factor, and other ones. But it's funny you talk about that. I told one of our colleagues about Doge, and I said, around 40 cents, I would take some off the table.
Yeah.
And I was prophetic on that one, but and we hit some and we don't hit others. But no, I really think that you need a strategy, and whatever that strategy is, you should try and be consistent with it. And the way I kind of look at investing, Ron, and again, we're not giving investment advice. I said that for you this time, is that you should have 2 bags. You should have your long-term bags of things you want to hold for a long time.
Yep.
Like Bitcoin, Ether, whatever it is, you have those, and you don't really touch those.
Yeah.
Then I think you should have a second bucket of tokens that you will trade, and it could be those same names or it could be other ones, and and leverage opportunity either buy it on a dip, sell it like on a, when it's had a run up.
Yep.
And you can do that in this way, be long in a name, but also, trade it as well.
Yeah. You got your safe money and then your play money in many regards.
Yeah.
Interesting. I think every day, we keep these really conversational. You and I always have a great rapport in this issue, in this topic. Every single day, there's a financial markets participant, and famous names that we know, JPM, et cetera, that announces something that they're doing in the crypto space. And I would argue that that's what you hear in the news, and that a lot of the industry that you and I know are trying to get deeply involved. So let's peel that back a little bit.
Sure.
Let's give thought to the ETF space.
Yeah.
And I think now 4 Canadian ETFs, either in BTC or ETH, I think, if I remember reading correctly, have been approved. Nothing's been approved in the States yet. I don't even know what the statistics are on ETF money in the States, for example. But what do you think of ETFs in the crypto space? Will they get the traction a lot of people think they would?
So I do. I think it's unfortunate that other jurisdictions are ahead of us. Yes, but it's consistent with the regulatory view of the space in our country.
Yeah.
So the reason why I like the idea of an ETF is that there is a segment of the public who wants exposure to crypto, but does not feel comfortable opening an account on a crypto exchange.
Right.
Does not feel comfortable, getting a wallet on MetaMask and doing it that way. That's definitely.
Or wouldn't know how.
Yeah. So I think, to me, the prevention of having an ETF is really preventing a segment of people who want exposure from getting exposure.
Yeah, fair point.
And so I think other countries have gotten comfortable with the volatility and with the other factors. There's concern about market surveillance and things like that. And I think other countries have gotten comfortable with it. And I am hopeful that at some point our country will as well. But in the meantime, you'll just see investment dollars go offshore.
Yeah. And,
look, people who are professionals have access to all different markets, and they will use that access to have access to those notes or those ETFs.
Right.
And I think, unfortunately, the retail folks are left with the least amount of options.
Yeah. Yeah. Well, I was just going to say, regulators and legislators, particularly in the States, their opposing view to that is that's to protect those retail investors. I would argue it does remove some opportunity to the retail investment community.
Yeah. Look, I think there are, market protection and consumer protection at the core of our securities laws are important. I personally just think at some point, people just need to have the ability to kind of control their own destiny. And if they want to be in things that are very risky, they can do it, or they should be able to do it. But, they can't come to the government and ask for help after the fact. You need to assume the risk and then live with the risk.
Yeah, I think that's almost a philosophical argument, that this debate we can have in an entire series of discussions, because there really is this movement, at least in the States, not against that particularly, but really ideas that are diametrically opposed to that for their own good. And we saw this, that you brought up GameStop when we were chatting earlier. If you remember some of the exchange interviews or the broker interviews, interactive brokers, Robinhood literally stopped for a variety of reasons, including throughput and capacity reasons, but stopped trading in certain securities, including GameStop, for example. Yeah. And one of the arguments some of them made, and I forgot which CEO of which broker, it might have been IB, was that, well, retail investors shouldn't be investing in this. They shouldn't be participating in this volatile market. And part of me viscerally pushed back on that, because in my mind, they don't get the right to decide that. And I know we're going down philosophic territory, but I think it aligns with some of what you're talking about from the perspective of crypto investments.
Yes. I mean, I personally, as long as the name is trading on the exchange, as long as there's not a hold on a specific security, I don't see who has the right to determine what subsector of the retail investment community or the investment community on a whole should have a right to trade it or not.
Right.
And really, I think only the commission should be the entity that weighs in, and that should be for everybody. So if they halted GameStop because of market activity or something else, and everybody was unable to buy it.
Mm-hmm.
Okay, the commission had a reason and they put a trading halt, or the exchanges had it. But I think just saying, okay, one part of the population suddenly can't buy it and everybody else can, it sort of perpetuates the discomfort some people have, and the idea that maybe the markets are tilted one way and not the other.
Yeah, really good point. So you raised the commission, Securities and Exchange Commission. Gensler, Gary Gensler, former CFTC commissioner, recently approved in a vote in the Senate as the new chair of Securities and Exchange Commission. I would argue that the market perception, or at least the crypto market perception, is he's fairly crypto friendly. I mean, he's taught crypto and blockchain courses, for example, and almost this perception of that it'll be a friendlier regime than the previous regime from the SEC. Do you agree with that? Any thoughts about that?
So I would just really take it at a high level. And what I would say is I don't know him. I've read, what he's done.
Yeah.
I don't know him personally. But what I would say is I'm kind of an actions guy. So, I'm curious to see what comes out of the commission. Is there going to be rulemaking? Is there going to be more enforcement actions? I want to see what comes out of the commission.
Mm-hmm.
Is Ripple going to be settled? Are they going to take it, the full distance?
Yeah.
So I feel like, I'm going to just wait and see and read carefully, as we all do, and, see if there's notions. But I'm hopeful that there will be, an opportunity for all sides to be heard, and that one view won't dominate the conversation, and the narrative at the commission.
Right. And in fairness, some of the commission personnel, relatively famous names in the ecosystem, Hester Peirce, for example, Valerie Stepanek, they're innovation forward folks, and it'd be interesting to see, in my mind, what some of their perspectives and public pronouncements will be. I want to talk about one other. I'm sorry. Go ahead, David.
Oh, I was going to say there is one other thing, and I think that there are multiple layers at stake, and so it's not only sometimes, are they going to be treated as a security or not, but it's also sort of the knock-on effects, because I think if the government on the whole wants to take steps to make it more difficult to be involved in crypto in the US, they can.
Yep.
So it's kind of like a multi-layered approach. So it's my hope that, as an innovator of markets that we are in the US, and now we have so many innovative people here, that everyone gets the opportunity to build out this new way of transacting, the new way of doing business. But that's my greatest hope. So time will tell.
Agreed, and it will take time. I'm with you, my friend. I want to wrap up with one other topic of conversation that I think is important. We'll probably be talking about it more in the future as well. Is this idea of staking and this idea of kind of earning interest in tokens? And I know you do deep research in this space, and you and I still have colleagues in different professions who will reach out to us on a regular basis and say, I had a call last week with a dear friend on the West Coast, and she said, look, I'm sick and tired of earning essentially net zero with inflation in my savings account, which is where most of her savings is.
Yeah.
How do I get involved in this DeFi stuff? Because I see you can make 10% interest or 8% interest. What are your thoughts about that marketplace? And again, there are risk profiles and risk tolerances. To the extent you're comfortable, talk a little bit about how you're engaged in that space and where you see that space going.
Sure. So, first thing, as you know, I've been one of the earliest supporters of DeFi, and
I know.
Talked about it at length, since last summer and earlier. But I'm a big believer in that there's different opportunities for people to earn income, passive income,
Yep.
on their money. And so like, I really like the way that there are certain platforms where you can take your Bitcoin and you can deposit them on the platform and earn interest, 4, 6, 8% interest. Some of them have licenses, banking licenses and other licenses. Some have insurance. So I think that there is a comfort level that your money is secure on some level. So like anything else, if you want more than a 0.25% interest, you have to be willing to accept some risk.
Right.
So the way I look at it is sort of, there's a ladder of risk and there's a ladder of reward. Yeah. And so what I like about DeFi is that there's a way to really quantify how much risk I want to take and how much reward I'm looking to gain. And you can weigh out and see where you fall on that spectrum.
Yeah. But, and just to reiterate the point, which is, I think, very important, it is buyer beware, at least from the perspective of these things are not FDIC insured, for example. No. So when we have colleagues saying, oh, I can earn 8% instead of 0.1%, very different animals, very different things you're doing in the space. And I think that's worth reiterating. What about the UX of it all? Is it easy, or is it easier than it was? And again, going back to the conversation we had earlier, most retail investors that I know, no family members, for example, would be able to stake on DeFi. What's that UX looking like?
So the UX is an evolution.
Okay.
There are some platforms that I still do not use. And it's not that I can't figure them out, but it's so mind-bending to use that it's just not worth it. I mean, and there's one, I won't call out a specific one. There is just one where it's breathless trying to use it. And so I just really don't use it. So what I would say is it's kind of a double-edged sword. I think the more user-friendly the platform is, the more likely that they will get people depositing on their platform. But I think in the first instance, Ron, there has to be a comfort level where you have to be comfortable like sending your crypto from a wallet, whether it be on an exchange like a Coinbase, to one of these platforms, and you have to be comfortable sort of sending your crypto to a different platform.
Right.
And in that in and of itself is like getting the address right, making sure everything you're sending it to another, like if it's Bitcoin to Bitcoin or Ether to Ether. Yeah. Or making sure it's like for like, and some people aren't comfortable with that. Yeah. And so I think the UI is improved. I mean, there's one platform which I think is great and made it so easy. And I recommend it to a bunch of people. But I think the easier the user experience is, the more people will get comfortable leveraging these platforms.
Yeah. And you've been saying it for a long time. You've been advocating to colleagues and friends that you and I both know, look, try stuff out, experiment a little bit, use minimal money, stake here, buy this. Don't put investment or retirement money into it, but it's worth learning by doing, which I think is a really critical component.
Absolutely. I think you hit it right on the head. And frankly, I'm surprised there are a lot of people in the space who are involved and who speak or who work in different capacities who don't even have a crypto account.
Right.
And who wouldn't know how to transfer crypto from one wallet to another. Right. And so I say this more as an encouragement to everyone that, if we want people to be in the space, we should encourage people to try it out. And it could literally be $5 or $10. But I really think that if people get comfortable with the user experience, they'll be more likely to use it. Yeah. So I think as one takeaway from, our high volatility podcast here, that's something I would encourage everybody to do.
Yep. And we, David, for anyone who's going to be watching or listening to this and isn't aware, you chair our Cryptoasset Working Group. Some of the stuff that you've been talking about, we'll structure around, I won't call them trainings, but really understanding and getting engaged in the ecosystem is something we'll focus on. We're scheduling out our next Crypto Investors Summit, which will be wonderful, and really looking forward to these deep topics, et cetera, as well. Anything you want to leave off with? We'll be doing these kind of podcasts going forward. You'll probably have guests. We'll probably have others. But anything you want to leave off with?
Well, first of all, I think, we're really happy to take questions for the next podcast and welcome, that format. I think also, Look, this is going to be a volatile time. I
Mm.
think that, we have some room to the upside, and then we may see, a correction at some point. And what I'm curious to see is if the coverage of it is continuously going to be, sky is falling kind of coverage in crypto, like, or, will there be a more balanced, reasoned approach? I think I would expect over time the coverage of this to mature to reflect the markets and the way they trade, and not constantly be like, there's a crash because it sells off 10%.
Right.
It's a function of the way these markets work, and the language, how we talk about it, should replicate that.
I agree with you, my friend. I'm going to hold your feet to the fire on one last thing.
Sure.
Predictions, not investment advice. You and I both know this. By end 2021, BTC, 100,000 or higher?
I think at some point in 2021, we will touch 100,000.
Wow.
But what I will say is that I think on a percentage basis, Ether is going to outperform Bitcoin from now through the rest of the year.
And both will be relatively volatile rides.
Yes. And look, one last thing I'll say is that, and I want to reinforce this, is that like if you have a bullish mindset on a specific token, don't give in to that urge, oh, it's down 20%, I need to sell. Like if your fundamental view hasn't changed, take that opportunity to either dollar cost average or just, build up your position.
Right.
I really look at those sell-offs as an opportunity.
I agree.
And now look, a sell-off could make you have a fundamental change in your view, but then have that fundamental change in your view. Like don't sort of, oh, the sky's falling, I'm going to sell, and then, oh, I still love this, and then I'm buying it back, at 50% higher than where it sold off. So
test your thesis, right? Like don't panic. Test the thesis itself.
Exactly. A lot of people have weak hands in crypto, and everybody has their own market sentiment and their own way they do things, but those weak hands end up hurting you in the end.
I agree. All right, my friend, we will leave it there. First of many. I'll clean up my act and stop the noise on the outside. We'll be doing this going forward and posting it for members and sharing with the ecosystem. David, always a pleasure. I really love chatting with you. We could do this for hours. Thanks again.
Yes, Ron, thanks so much. And yeah, we could do 2 hours of this and it would fly by. So thanks for having the platform, and WSBA for having our crypto assets trading working group, and look forward to more lively conversations.
Same here. Cheers, my friend.
All right, take care.